technicals have been communicating yen resistance for really almost the full month. Basically, when you look at dollar yen, this 94 level, 94.50, has been tremendously strong resistance. 93.50, 94.50 is pretty much the quarter. What you see, it pierced into 94, came back down. Pierced again, 94 came back down. Pierced again, could not break it. We had a gap opening on Sunday, which broke above 94.50. Got everybody excited. And then this was technically a horribly negative construct. Before 8 o'clock Tokyo time, the open of Japanese markets, we gave it all back and closed the candle on the lows. This was a very significant tell that there was tremendous amount of supply above 94.50. There was a lot of sellers above there. And then, of course, we had tremendous amount of technical destruction. Now, having come down, and you're looking at the chart right now on a short-term basis, the only thing that gives you solace if you're a bull is that we've tested 91 level 2 or 3 times and bought it back quite a lot. This whole area has become pretty much a value proposition area. Every time we've been dipping here, there's been a lot of value buyers, possibly late longs, or people who want to establish positions that haven't had a chance to do so are definitely buying here. This area gets broken. We break 91s. That is a very negative technical construct. They would tell you that the yen could basically unwind and break a lot of hearts and maybe go all the way back down to the 88s, maybe even 85s. For me, a buy signal in dollar yen, a true buy signal, does not occur until and unless we literally hit 95. Right now, we're just basically working off this very negative break, and every rally feels to me like it's a sell rather than a buy. You could buy some short-term trades here, but you're coming up against 93s, which has been a big resistance level, 93.50s. All this positive news that hits the market about dovish central bankers and everything else not having an impact. A key trade that everybody always loves to trade. And by the way, trade was talking about the idea that how fast it came down. The statement in the currency market, the futures market is, they go up by a staircase and they drop down by an elevator, which is a very, very common thing. Liquidation can happen instantaneously. But once liquidation happens, the damage is done, and basically it becomes very, very tough to clear a lot of these levels. So I think, it's pretty much a sell the rally story rather than a buy the dips until you get down to the support level, and then we get a true test. Are buyers really going to hold this level? Then you may have a recurrence. But what I was going to finish up with is, when you have positive news, so you have all this positive news coming out and negative price action, you always want to trust the price action. If the market is not confirming the news, then the market is telling you it doesn't care about the news and it cares about other principles, and you should follow what the market is doing.